Hi everyone, my name is David Mann, and here at Empire Life I focus predominantly on international equities. There's never really a shortage of topics to discuss in these markets, but today I want to talk about a relatively new concept, and that concept is the K-shaped recovery. Then I'm going to tie this K-shaped recovery to an investment that we have in the international fund. Historically, there's been many letters that have been used to describe different forms of recoveries. On one end of the spectrum, you have a V-shaped recovery, which describes a situation where there's a very quick snapback in economic momentum or equity markets or whatever is being discussed. On the opposite end of the spectrum, you would have an L-shaped recovery, which is a recovery with low or very no growth, and there can also be permanent impairment. A K-shaped recovery is a bit different. If you think about the shape of a K, there's a vertical line and then an upward and downward sloping line. For the sake of this conversation, the upward sloping line would represent improving trends, whereas the downward sloping line would represent worsening trends. COVID-19, I think, is resulting in a K-shaped recovery. It's causing an acceleration or an amplification in trends that we have already been seeing before. It can be used to describe many different situations, again, a stock market, an economy, or sectors. Today I want to use it though to talk about businesses' digital capabilities. I think what's happening is COVID has caused an amplification or acceleration in the trend that we've seen, whereby companies with high digital IQ or high digital capabilities are outperforming those with low digital capabilities. And that's one of the first questions we ask management teams. What are your digital abilities? What are your accompanying growth plans? And ultimately, what is your digital IQ? In the international fund, we have an investment in a business called Inditex. They operate many different brands, but their most well-known brand is the apparel retailer Zara. During the lockdown at one point, over 85% of their stores were closed. This meant it was really hard to go in, try on, and ultimately buy clothing. Fortunately, for years, they've invested a lot in building out their digital capabilities and building out their omnichannel presence. This meant that you could buy apparel online and have the confidence to know that you could return it to them either through the mail or by going to stores whenever that should open. And that was fantastic because during the first half of the year, their online sales grew by 74%. They had the profits from those sales to sustain operations, pay their employees, and ultimately continue to invest in the business. Digital sales account for 14% of total revenues, and by just 2022, they expect that to reach 25%. We consider Inditex to be a business with very high digital IQ, and it would represent a company on the upward sloping line of a K. You can contrast that with a business that has no omnichannel capabilities and no digital presence. During the lockdown, they would have had sales close to zero. They would have had no profits to sustain their business, and ultimately it could result in bankruptcy. To be clear, there are many other factors that contributed to Inditex's performance, but their digital capabilities was a critical one. COVID-19, we think, has resulted in an acceleration of this trend again. Companies with higher digital IQ will continue to outperform those with low digital IQ. This is something that we think is secular and is important to pay attention to when analyzing most businesses in equity markets. With that, I'd like to say thank you very much for watching or reading the transcript.